So, professors, we are starting our first topic, that is books of account. And before we begin to look at certain details, I would want us to appreciate the picture on the screen. And of course, I'll need your reactions, your viewpoints on what you see on the screen. So what do you see, professors, on this screen? And what can you say about this picture? So if you are ready, you put up your hand to alert me and I'll call you to give us your viewpoint. Okay, I guess I would have to call one of you then. Okay, Portia, please give us your viewpoint of what you see.
So these are the processes in accounting information.
Okay.
Good morning, sir. Sorry.
Okay, so Portia is seeing the processes in accounting. Okay, anything different from what she's seeing? Augustine, I'll call it anything different. I see anything different from what Portia saw or Portia is seeing? Okay, Lord Listowel, let me hear you on that. Okay, Lord Listowel, let's hear you. You have your hand up. Let's hear you. Lord Listowel, I don't know. You wanted to share your viewpoint. Please go ahead. Okay, that could be a wrong alert. Okay, so professors, indeed, what is on the screen is the accounting cycle, or what you know as the processes in accounting, or the various stages in accounting, right? So I want you to pay attention to the specific steps. So you see step number 1, 2, 3, 4, 5, 6, 7, 8. Now, why am I showing you this picture? I want you to appreciate that the first stage in accounting is the identification of transactions, right? Specifically business transactions. And we know what business transactions are. After that, you go on to record. You record these transactions in a journal. After doing the recording, you post to the ledgers. Now, I would want us to pay attention to just the first 3 steps. Identification of the transaction, recording the transaction in a journal, and posting. Now the question is, where do you record the transaction after identifying it? And what are some of the things you use to even identify a transaction? Now, on the basis of these questions, professors, I'll lead us to the main theme of today, and that is books of accounts. Books of account. So why these books of account? We are looking at these books of account because we need to appreciate where we record business transactions after we have identified them. Now, I would want this to be more relatable. So even in school as students, when your teachers give you notes, math, science, accounting, whatever. You have specific books you write these notes in. And so I'm sure each and every one of you here has a math notebook, a science notebook, financial accounting notebook. So these are books where you record your notes. It is the same realities in accounting that we have books where we record business transactions. If what I've said is okay by you, I'd want one of you to read the introduction for us. So Lord Listowell, your hand is still up. If you can read the introduction for us, I'll be so grateful.
The introduction is, please, I quite don't understand, but I think earlier on you were asking of the accounting process, but so I'm confused with everything.
Okay, so the point I just made, Listowell, is that in accounting, right? In accounting,
Yes.
we follow a process in recording transactions, right? Now, what are
Okay.
what are business transactions? We said these are events that can be measured in monetary terms. So if you engage in any activity that has monetary characteristics, then that is a business transaction. For example, if you go to Melcom and you buy a shoe, that is considered as a business transaction because the shoe has a monetary value. Do you get that point?
Yes, please.
Good. So as an accountant, what you do is you identify these transactions, which is this event, including sales, purchases, depositing money into a bank account. All these are events that have monetary characteristics. So you first identify these events. Now, when you identify this event, you go on to record, okay, the event. Where do you record the event? You record it in books, right? So those books where you record this event is what we are going to look at today in our discussions. I don't know if you now appreciate it. Prof. Listowell, are you clear now in your mind as to what we are doing?
Yes, please.
Okay. So you can now go ahead and read the introduction on the screen for me.
Okay. Please, under the double entry method of bookkeeping, all business transactions are initially entered in the books of original entry or journal and then posted into the principal books of accounts called the ledger. The books of accounts are split so that a distinct book is used for each type of business transactions that are recurring in character, similar, and adequate in number in order to be able to record all of a company's business transactions effectively.
Okay, thank you very much, Lord Listowell. Thank you very much. So as you read the introduction, I think you should be able to get the impression as to the books we use in financial accounting. So as you read, directing you to these books of account, you can see that they said all business transactions are initially entered in the books of original entry or journal and then posted into a principal book of account called the ledger, right? So that is to tell you that in accounting, the names of the books we use are journals and ledgers. I think you can note that down. The names of the books we use are journals and ledgers. So basically we have two main books we use in accounting, journals and ledgers. We'll begin to appreciate more about them as we move on. So by the end of this lesson, You should be able to define what books of account are. You should be able to list them and also outline the format of these books of account. So let's quickly dig in without wasting my time. So books of account. Professor's books of accounts refers to records or books in which financial information or transactions of a business or an entity is kept and maintained. So the example I gave in the introduction, you keep your accounting notes in your accounting notebook, right? So the same way businesses also keep their business transactions in books called books of account, which specifically are two: journals and what? Ledgers. Journals and ledgers. Now we need to know what a journal is and what a ledger is. So let's move on to define a journal and a ledger. So let me call one of the professors to read the definition of a journal for us. Prof. Inshura, can you read the definitions for us on the screen? The definitions for us on the screen.
A journal is also known as a book of prime entry, a book of original entry, or a subsidiary book or a day book. It is a book in which transactions are recorded first on daily basis. A ledger. A ledger is also known as a principal book of accounts or a book of secondary entry, into which transactions recorded in the day books are posted into.
Okay, thank you very much, Prof. Inshura. In fact, apologies to the noise at the background. I don't know what is wrong with that that cock or hen. That's just by the way. So a journal is a book of prime entry, a book of original entry, or a subsidiary or a day book. So that is to say, a journal can be referred to any of these: book of prime entry, book of original entry, book of first entry, because prime means first, right? Or a subsidiary book or a day book. Now, it is so because this is the book where transactions are recorded first on daily basis. Now, if I want to link this to the notes you keep in schools, then I'll say a journal is more or less like a jotter, right? So most of the times in class, when teachers are giving first-hand information, you first record it in your jotter. Then later, you transfer into your notes. So a journal is the first book. One thing you have to note is the first book. That is why it is the prime book of entry, or is a book of original entry. And this book is used on daily basis, right? So that is a journal. The second one is a ledger, as she said. This is known as the principal book of account, or a book of secondary entry, into which transactions recorded in the day books are posted into. So after you've recorded in the journal, you now post into the ledgers. Now note, the ledger is a principal book. Why? Because that is the book where we do the debit and credits, which is the basis of the double entry principle. Okay, so it's called a principal book because in that book, we apply the principle of double entry, or the double entry principle. Please, I hope I'm not confusing any of you. If I am, please ask your question. Let me clear it up. So by way of quick review, we are looking at books of account, and we are saying these are books or documents where businesses keep their transactions. There are two main books of account: journals and ledgers. The journal is the first book where you record transaction on daily basis. The ledger is the principal book in which you do your double entry debit and credit. Please, are we good to go?
Yes, please.
Okay, so no questions so far. Now, what is next is for us to list the books of account. List the books of account. So I'll leave you some 5 minutes to go through and familiarize yourself with this diagram I have on the screen, right? So I want you to pick few things down and I'll ask few questions and we move on. So maybe 3 minutes maximum. So observe this, is it tree diagram or whatever it is? Okay, so as we have indicated, the day books are 7, right? Which are the sales day book, purchase day book, return inwards, return outwards, the petty cash book, the cash book, and the general journal, right? And as you all indicated, what each of them is used for. The sales day book is used to record credit sales, right, on daily basis. Purchase day book is used to record credit purchases on daily basis. The return invoice is used to record goods returned to the business by its customers, while the return outwards is used to record goods returned to suppliers by the business, right? The cash book is used to record receipt and payment of cash and check, right? Receipt and payment of cash and check. So that's what the cash book is used for. And the petty cash book, petty means small, right? So it is used to record, payment of small expenses, right? And monies received from the main cashier to cater for these small expenses. We'll look at it into details. And then the general journal, as I've indicated, is used to record all other transactions that cannot be recorded in the other 6 journals. Okay, so let's be clear on these functions and what these books are used for. Please, any questions so far? Any question?
No.
Okay, thank you very much, my professors. So now we'll pick, okay, I think Lord Listover has a question. Lord, please go ahead.
Please, what of the ledgers?
Okay, so we'll definitely look at the ledgers after the day books, right? So we are building on it gradually. Okay, thank you for the questions. Now, one thing I want to make my professors aware is the fact that if you look at the initial diagram I showed you, right? The first thing is identifying the transactions. Now, in identifying transactions, there are certain documents that are needed, okay, to give proof of the transaction. So, for example, let me give you a scenario. If your daddy gives you money to pay school fees and you come home, how do you prove to your father or your parent that you have paid for the school fees? I need an answer on that. How do you prove to your parents that you've paid the school fees? Yes, Prof. Portia.
By showing a receipt.
Thank you very much. So you show a receipt, right? So that receipt is then the document that proves the transaction. Okay, now documents that give proof of transactions are referred to as source document. So for every transaction, there should be a source document giving proof of the occurrence of the transaction. Now, it is these documents we use in preparing these day books or journals. So professors, we need to appreciate the documents that are used in identifying the transactions to subsequently prepare the day books. And I think we'll do that in our second session. This session is over. So professors, go on to the page. Okay. And then get the second session details to log on. But before that, let me make this final comment.